You know, just when I thought I'd recover from the March 2020 crash, well, here comes March 2021. Oh boy, what am I gonna do, right? It's just another day in the life. Hey, what's up you guys? Welcome back. So if you've been paying attention to the stock market recently, you would know that things turn real poopy real quickly. In fact, it's not just the stock market, even things like crypto have downturned. And a lot of you have been asking me what's my opinion on all of this. So yeah, let's dedicate this video to talking about it. By the way, if you want to make back some of your losses, I do have referral links down below where you can sign up for Newton and get a free $25 bonus when you invest your first $100 worth of crypto. And I also have a link for ShakePay as well, where the referral bonus is $30 when you sign up and invest your first $100 worth of crypto. Now, I won't dive into too much about the reasons why the stock market crashed specifically, because if you've been investing any sum of money in the past, like, I don't know, 6 months or so, you will know that it's been pretty much green every day, right? I mean, we've had a little hiccup back in like the fall, I think, but we bounced back real quick. So if you were to ask me, I just think that the recent stock market crash is just caused by the stock market getting a little bit too far ahead of itself, and a correction was bound to happen. Now, for the past little while, it was like if you bought anything, it went up, okay? So obviously, this is unsustainable. So not all stocks go up all the time. I mean, I've been on the internet for a really long time, and I know, okay? So I know people say stocks always go up, and yeah, I understand that. But in the long term, that might be true. But in the short term, you're going to have fluctuations. And if you buy individual stocks, not every single individual stocks will go up, right? So if you invest all your money into companies that you don't really like understand, or companies that have bad fundamentals, well, then they might go down, and they might go down by a lot. Even if you invest in companies that have good fundamentals, well, it's not going to be a straight line up, right? There's going to be peaks and valleys along the way. In fact, right now that we're in this correction, I wouldn't be surprised if the stock market fell another 10 or 20%. And I'm not just trying to be negative here or anything. I just think that, you know, given how overvalued the stock market is at the moment, even though the market fell another 20%, you could probably still make an argument that it's still overvalued, at least for large caps, that is. So I've been investing in the stock market for a long time, ever since I was 18. So I'm 25 now, so it's been around 7 years, and I'm kind of used to these events, right? These like peaks and valleys and these volatility like fluctuations. But I understand that a lot of you watching my channel are relatively new at investing, so you might not have been through a market crash. So you got into the market after the March 2020 crash, in which case your account has probably grown a lot, right? And you're thinking, wow, this is so easy. Well, we have good days and we have down days as well. Sometimes it is easy and sometimes it isn't. One of the most frequent questions though I get asked from viewers is that how do I not panic when I see my account just bleed red, right? How do I not panic when things crash? Well, let me just offer some of my opinions and advice, if I may, on how I deal with market crashes. First, number one, you gotta make sure that you absolutely understand what you're investing in. And I mean really understand the company. So stop me if you've heard this before. I think I said this in a previous video, but I'm gonna say it again. I always say that everyone should have that one thing that they understand better than anyone else in terms of like value and price. So for example, for some people it might be computers, right? So if you see a list of computer specs, you can go, oh, this computer is overvalued or this computer is undervalued. For some people it might be cars. For some other people it might be, I don't know, makeup, right? So there's at least one thing out there that you understand probably way better than anyone else. And you can easily say that whether something is overvalued or undervalued if it's from that particular category. So with that in mind, all I'm doing is just asking you to extend that to stocks. So if you could get that good with stocks, if you could understand stocks to such a level where you can say that it's undervalued or it's overvalued, well then you'd be an above average investor just on that point alone. Practically though, what this means is that you need to understand the product or service that the company provides, obviously, but you also need to understand how the company generates its profits, and you also need to understand the management of the company. So you really got to try and find the most accurate and most complete picture of the company possible. So a famous example of what could go wrong when you have a significant stake in a company that you don't understand. Well, back in early 2000s, there was this company called Enron. I'm not sure if any of you have heard of them. They're an energy company that got caught for committing massive accounting fraud. And when the fraud was revealed, the company, of course, went bankrupt. And now that event is known as the Enron scandal. Now, after the Enron scandal, a lot of insiders of the company, they lost a lot of money, okay? So they had their pensions tied up in the company, or they just had straight up company stock, and the company went bankrupt, so all of it was gone. So it wasn't like everyone in the company was in on the fraud, by the way, okay? So in fact, a lot of people who worked at Enron had no idea. So they spent 40 hours a week going to work, and a lot of them might have even worked in the finance department, and they spent 40 hours a week working for this company, but they didn't understand how this company generated its profits, and they didn't see anything wrong with any of the financial statements and all that stuff, because not everyone pays attention to this, right? I understand, but it's just if you have your pension tied up in a company, or if you have a lot of your wealth tied up in a company stock, I think that you should actually read the financial statements and things like that, and really try to understand it, because if you encounter a situation like Enron, and you have your pension tied up, one day your pension just goes poof. And I understand that this is somewhat of an extreme example where the company was committing active fraud, but if you're going to have your pension, or again, a significant amount of your wealth tied up in a company, you got to really understand it. And I know a lot of people are like, oh, I don't invest, I don't like stocks, I just want my 9-to-5 job, I just want my stable salary, and that's okay. But whether or not you like it or not, you got to put your money somewhere, okay? And if you put it into something that you don't understand, well, then that's a big risk that you're taking on. Because at some point, it doesn't matter whether or not you care about stocks. Stocks will care about you. Wait a second, that didn't make sense. You know what I mean. Okay, moving on. Second point. Just pretend that you can't sell. So I know a lot of you watch Meet Kevin, and he has this phrase that I really like that he says all the time, which is the sell button is broken. So just pretend that that's the case, right? Just pretend that the sell button is broken when you log into your brokerage account, and if you click on the sell button, it'll just crash your computer. Just pretend that that's the case. Just pretend that you can't sell and you can only buy. Because if a stock goes down for no particular fundamental reason, and there's nothing wrong with the company, and there's nothing different about the company compared to where you bought it at, then why would you sell? I mean, unless you needed the money for rent or food or something, but I would always suggest that you don't invest money that you're going to need for rent or food or for anything that is necessity based. Let's just say that you don't need the money anytime soon. Then why would you sell? Okay, you wouldn't. So imagine that almost a year ago we had that market downturn in March 2020. Remember? And then you sold and then you bought back in March. So let's just say you timed it perfectly. Well, then you probably would have made a killing. However, realistically, if you actually did that, well, then maybe at the bottom of the market in March you would have been too afraid to buy back in, and then you would have missed the run up when it came back, right? So if you just bought at February of 2020 and you held till February of this year, which is right now, if you just held that 1 year, you probably still would have made a huge killing, even if you suffered that March crash and you didn't do anything. So my point is that buying and holding is very easy, but timing the market is very hard. And if you try to time the market, unless you're an expert day trader or something, but most of the time, if you try to time the market, you probably actually end up losing even more money, because you either panic sell, you act emotionally, or you just leave a lot of money on the table because you acted emotionally, right? So I wouldn't recommend anyone panic sell. So just pretend that the sell button is broken. Okay, moving on. So I do want to spend some time talking about the crypto market once again. I know the crypto market tends to attract an even younger crowd than the stock market, and an even less experienced crowd probably as well. So the crypto market is also known for having much more volatility than the stock market, which doesn't help, which leads to people reacting even more emotionally. So I'm just going to read you some of the articles that I came across in the past few days with Bitcoin price was dipping from, I think it was like 57,000 US dollars all the way down to like 44 or 45,000 US dollars. So quite a big drop we're talking about. It's over a 20% drop. So I'm just going to read you some of the articles and you can draw your own conclusions as to whether or not it's a good decision to panic sell all your Bitcoin or it's a better decision to just hold them. So I'll let you make your own conclusions. I'll just read you these articles, right? So the first one that I'm going to read for you is MicroStrategy buys more than $1 billion worth of Bitcoin, adding to massive holdings. And this was published on Wednesday, February 24th, 2021. So MicroStrategy announced Wednesday that it bought just over $1 billion worth of additional Bitcoin just days after finalizing another sale of convertible debt. The Virginia-based enterprise software company said it paid an average price of $52,765 per Bitcoin, including fees and other expenses. Its acquisition of approximately 19,452 Bitcoins puts MicroStrategy's total holdings of the digital token at 90,531. Okay, so MicroStrategy is buying big on Bitcoin. I don't know if you are buying big or if you're selling. Next article. If Coinbase is worth $100 billion, what's the fair valuation for Stripe? Mere days after we discussed Coinbase at $77 billion and Stripe at $115 billion in the private markets, those same semi-liquid exchanges have provided a new valuation for the cryptocurrency company. It's now at $100 billion per Axios reporting. Good thing we argued last week that there could be some merit to Coinbase's $77 billion secondary market valuation from a particular perspective. We'd look silly today if we mocked the $77 billion figure only for it to go up by about a third in just a few days. Okay, wow. Could someone in the comments please tell me down below how to make $23 billion, how I could also make $23 billion in a few days, because I would love to know. So Coinbase, in case you don't know, they're a crypto exchange and they're a crypto company that you can buy and sell crypto from, and you can store your crypto with them. And usually big companies, when they buy crypto, they store it with Coinbase because they're like one of the most well-trusted companies in the entire industry. And yeah, they're doing an IPO soon, so their valuation is just shooting through the roof at the moment. So yeah, good news for crypto if you ask me, but I'll let you be the judge of that. Anyways, next article, talking about Coinbase though, Bitcoin outflows from Coinbase suggest that institutions are buying the dip. Big money continues to chase Bitcoin on dips, blockchain data shows. So large investors seem to be accumulating Bitcoin at relatively bargain prices in the wake of cryptocurrency's recent pullback. The suggestions of outflows of the cryptocurrency from institution-focused Coinbase Pro exchange, which rose to over 13,000 BTC, worth roughly $650 million on Wednesday. The figure represents the largest movement of Bitcoin off the exchange in 3 weeks, according to data shared by blockchain analysts from CryptoQuant. The outflow went to multiple custody wallets, indicating U.S. institutional investors are buying the Bitcoin on the dip. Ki-Young Ju, CEO of CryptoQuant, told CoinDesk. I think that this is a bullish signal. Anyways, okay, well, last article I'm going to share for today. JP Morgan says investors could make Bitcoin 1% of portfolios. JP Morgan Chase, in the latest Wall Street firm, floating the idea of investors using Bitcoin as a way to diversify their portfolios. Strategists have recently touted cryptocurrency as a way to hedge against significant fluctuations in traditional asset classes such as stocks, bonds, and commodities. Rather than make any big bets on Bitcoin, they've seen recommending a relatively small allocation, which shouldn't take too much of a hit even if the price goes down substantially. So even companies like JP Morgan, which is one of the most traditional banks you can think of, right? Or traditional financial institutions you can think of, even JP Morgan is recommending that you at least touch upon Bitcoin. So as you can see, institutional interest in Bitcoin is only heating up, and in crypto in general, not just Bitcoin, but with this whole DeFi thing going on, right? Ethereum and things like Cardano, they're getting more and more popular as well. So But with in particular reference to Bitcoin though, when you're panic selling Bitcoin, well, guess who bought it? That's right, rich people, billionaires, big companies. Shall I go on? So I hope this answers your questions as to whether or not you should panic sell your Bitcoin or hold on to your Bitcoin. I'm not pulling random articles from like 5 years ago, by the way. This is all within the past few days. So if you notice all the dates of the articles I just shared, this all happened within a few days. This all happened within the last week. So don't be surprised a few months from now if Bitcoin is like 20% higher from its absolute peak so far. And then we have companies coming out of nowhere and be like, oh yeah, we bought Bitcoin back when it was like $45,000. Well, I guess we just got lucky. Ha ha ha. Well, maybe I'm just being delusional, but you guys let me know, right? So I feel like that's definitely going to happen. So I'll leave the video here for today. Be sure to give a thumbs up if you haven't already, and consider subscribing if you haven't already. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye!